welcome to Money Lessons Live. We are continuing the series tagged Academy of Investing, choosing the right mutual funds here in Nigeria. If this is your first time with us on Money Lessons Live, I would like you to hit the subscribe button so that you can make comments and maybe ask questions if you do have any as we go on in the live stream this evening. Tonight is going to be very brief, so if you're here, try and separate yourself from every form of distraction so that you can get the best value for your time with us this evening. This is the first time I'm going to be teaching mutual funds on a live stream like this, apart from the other time I did on Money Lessons Live on Telegram some months ago. It's a long time. I think that was audio actually. So this is actually going to be a class. This is not a webinar, it's a class. So get your book, get your bio. You're going to be learning a whole lot of stuff today that's going to be useful to you for a lifetime. You already know that everything I teach on Money Lessons is not, how would I put it? It's something that is useful, forever. It's not that you're going to only use this information or knowledge tomorrow and then afterwards it's not going to be useful again. Now, what you're learning today, you can teach, your loved ones, your friends, your spouse. It's for life. All right. So let's hit the ground running. So for those of us that are joining for the first time, this is Ogochukwu Okolocha. I'm so excited to have you on this live this evening. I'm always, happy to see young people come together to learn about how they can make the best use of their money. A lot of people are teaching, how to make money, how to, earn extra income, but not many people, teaching how to manage money and how to multiply money. So, Money Lessons, our priority is to guide you on how you can manage your money and multiply your money, because the time is going to come when you can no longer work. The time is going to come where your strength is going to fail you, where your intellect is going to fail you. At that point in time, you shouldn't be asking other people to send you money to survive. You should be able to earn money in your later years when you're not working. So I've been actively guiding people to invest over the last 3 years. And I don't just guide, I can, teach you as well. So we are here to learn. At the end, those of us that are interested in my guidance, I'm going to guide you as well. So my investing journey. Last week, I showed us, or I explained my journey from 2012 up to date. Today, I'm not going to be talking so much about how I started with different Ponzi schemes, made a lot of mistakes, learned from them, and is the fundamental or is the foundation of Money Lessons today. I'm just going to focus on 2022, 2023. So bonds, mutual fund, commercial papers. Although I've known about mutual funds since 2018, 2019, but I only started paying more attention to them in 2022. And that's what I'm going to be sharing with us this evening. But first, before we go into mutual funds, it's good you have an understanding of what investing is. Not many people understand, what investing actually is. So some people, they look at investing as gambling. So when you tell them, come and invest in opportunities, they run away because they have likely gambled before, maybe made some investment that were not really smart, and now they're having phobia for investing again. Investing is the process of buying assets that increase in value over time and provide returns in the form of either income, you're going to get residual income either on a monthly basis or a quarterly basis, or capital gains. Capital gains is, say, for example, you buy a plot of land. For you to profit from that land, you need to sell it to somebody else, and then you get your capital plus your interest. But when you buy, say, a property, a rental property, you have maybe 6 flats in that building, and you rent each of those flats on a yearly basis or maybe daily basis based on Airbnb kind of model. You earn without having to sell that property. That's what you call cash flow. So the different kind of investments, either you're making an investment for cash flow or you're making that investment for capital gain. It's always good that you know what kind of investments you're making and what to expect before you put your money in it. Because some persons have in the past, invested without having an understanding of what they're investing in, And then later, when the investment doesn't perform in the way they expected, either they start dragging who recommended them to them, or they just say, oh, investing is a scam. So this is why I always like that you come to sessions like this. I know that a lot of you believe, trust that whatever I say you should invest in, you invest in it. But I do not want to be speed feeding you or spin, what do I call it? Spoon feeding you all the time. I want you to have your own understanding. I want you to have, your own, um, just make the decision yourself. Even when I'm not there tomorrow, you can take right decision. Okay, so I'm having a bit of running nose, so sorry about that. Excuse me. Hmm. All right, so let's go ahead. Cash flow quadrants. I've talked about this in one of our live sessions in the past, so I'm going to talk about it again. I'm guessing that many of us that are on this live stream this evening are employees of one organization or the other. Say you work 8 to 5, so we earn a certain amount of money on a monthly basis, and you're looking for what to do with that money. Many a times, some individuals earn money and get confused on what to do with that money. So either they start buying things they don't need, or they start giving money out to their friends, their family, to their loved ones. And after working a certain period of time, they now found out that they have wasted money. So it's very important that you find a way to move from this employee points to investor. So this is what we're going to be talking about this evening. How you can move from an employee, you have a job, you get paid on a quarterly basis, you get paid on a monthly basis. How can you put that money to work? That's what we're going to be learning this evening. Some of us, maybe you are self-employed, so you own a job, you get paid based on the contract you do or the services you render. You have to find a way to move from either self-employed to business owner or self-employed to investor. And I've talked about this before. The reason why you have to move from self-employed to an investor is so that when you're not working, you can still earn money. Because now that you are, self-employed, you're your own boss, the danger, the risk there is that you only get paid when you offer a service or when you deliver a certain expectation to your clients or to your customer. So it is necessary that you find a way to move that your gig that you do. Maybe you're a graphic designer or a content writer or a stylist, a makeup artist, whatever it is that you do to make up money or whatever you do to make money on a weekly basis or a daily basis, you have to find a way to move from that point to a business owner. Maybe now you now have more artists or you have graphic designers or you just have a team of people that do the same thing that you do so that when you're not working, you're still earning money. That is what a business is. So this time around, you're no longer the one doing the craft, you're no longer the one delivering the service. You have a team of people delivering the service. Now, not many of us can own a business. Like I always say, if you're a salary earner, if you work 8 to 5, I would prefer that you invest instead of looking for a business to start, because you likely will not have time to build that business in such a manner that's going to be profitable. So stay with your 8 to 5 whilst learning how to invest. So those of us that are here this evening, celebrate yourselves for joining us because you are doing exceedingly well. Okay, so if you're just joining us, type in the comment section your location, your name and your location from where you're joining us from. If you're not able to type in the comment section, it's likely because you just subscribed or you have not subscribed. So if you want to be able to comment, subscribe to Money Lessons channel now, and then I would like to see your name and your location. If it's your first time, you can also let us know right there. Okay, we're going to continue in moments. I'm having a bit of running nose, so I need to address it. Okay, so I'm back. All right, so I hope you're getting what I'm saying. So cash flow quadrant, every one of us belongs to one section of this quadrant. So you have to, at some point, find a way to move from this first quadrant, which is the employee status, to the investor status. This is not going to happen overnight. You're not going to automatically become an investor that will not have to work. Now that you're an employee, now that you have a steady flow of income on a monthly basis, at the time you have to start stacking those funds to build a portfolio such that in the next 5 to 10 years, or maybe 15 years from now, you can have an investment portfolio that funds your lifestyle, that funds your living expenses, such that you don't need to depend on your 8 to 5 anymore. In fact, at that point in time, you cannot decide to quit. That is the whole idea. A time when we can decide not to work anymore. Maybe just get to the office one day and then your employer is telling you, something that you don't like to hear. You don't walk away. I can remember, I think yesterday or 2 days ago, somebody in my community, or maybe even today, somebody was talking about how, it's not always excited about, his workplace because of how the people talk around him there. And it's unfortunate that he's not able to quit at the moment. You see, this is why it's good to have an investment, because there are some times where you need to make some drastic decisions in your life and you can't wait until you get another job. You just need to quit. Right? So you could quit, and because you have investments, you could even be idle, for 3 months and not have to depend on anybody. That is the idea of investment. Investing is done so that you can have an alternative, so that you can have a backup, so that if anything happens to you, if your company shuts down tomorrow, or if they have to lay off some staff, you don't go hungry, you don't go begging, you don't go taking debts, and so on. So it's a lifestyle that everybody must emulate. You don't only live once, like some people say. I always say that some of us will be fortunate to live to 90 and maybe even 100. So if you squander all of the money you are earning in your 20s, 30s, 40s, 50s, what are you not going to survive on in your 70s, 80s, 90s? So think about it. In Nigeria here, where the pension scheme is not so great, not so fantastic, whatever you are contributing to the pension scheme on a monthly basis, it's not going to be sufficient to take care of your livelihood when you retire. I'm sure you have seen on the news where some pensioners of civil service, they go to queue up trying to get their pension. They have to drag government every now and then. I don't think you want to find yourself in that kind of situation where you start dragging your pension fund manager to send you, money to survive, or you start calling your children. My boy, I beg, send me some money. May I used to buy fuel for Jen. That's not the kind of thing that you want. This is why this talk about investing is serious. So the much money that you make, the much you should invest. As you're increasing your income, so also you should be increasing investing. What many people do is that as they earn more money, they spend more money. So we call it lifestyle inflation. And this is why I always tell people, that if you cannot invest out of the little that you earn today, there's no guarantee that you're going to invest out of the much you earn tomorrow. In fact, it's when you start earning more money that you now discover that the place you are living is not good. You now start thinking of maybe renting a new flat, or buying a new car, or buying bags, but changing your phones. There's always something to spend money on. Remember, Adam Smith said human beings' needs are insatiable. Some of you now, you eat food without maybe chicken or without fish. You just eat the rice anyhow. As soon as you start having money, you now remember that there's something called chicken, there's something called turkey. So if you were spending 100K on feeding every month, because you now earn 500K, you now increase your feeding cost to maybe 250. So you find out that there will still not be money to invest. So now that you're earning little, right? 100K, 200K, 300K, this is the time to learn that habit of investing. Out of the little that you're making, invest, right? So this session is not just teaching about, why you should invest, right? It's teaching you where to invest. So we're going to be learning about mutual funds this evening. There are many places to invest. There's treasury bills, there's government bonds, there's REITs, and lots more places to invest. But one place we're going to be talking about investing this evening is mutual funds. Okay, Isaac, I see you. Chiedozie, I see you. Chinedu, I see you as well. Good to have you guys. If you're just joining us, you could type in the comment section your name and location you're joining us from. If you're not able to comment, subscribe to the channel, and in the next 5 minutes, you'll be able to comment. You could tell your friends that we've started. What I'm teaching this evening is not common. You will not find many people teaching about mutual funds. So this is premium knowledge. I'm just giving out for free. So those of you that sacrifice your time to be here this evening, thank you for joining us. And I promising you that this is not going to be a waste of your time. So you could see on the left-hand side, we have green. On the right-hand side, we have red. That is telling you that the risk is increasing. So you have treasury bills as low risk, and then you have Bitcoin and altcoins as high risk. There's something I often say: you cannot invest in a high reward instrument and expecting that you would get your capital back the same way you invested it. Sometimes in a high reward kind of investment, you could encounter losses with them. Right now in the stock markets, now in the crypto markets, there's been a lot of volatility. Prices are falling. A lot of people are scared, especially first-time investors. What I have to tell you is that you see this dip that's happening in the market is normal. That is why it is called a high risk investment opportunity. Now is the time to buy more. Now that people are running away, now people are selling off their stocks, selling off their cryptocurrencies. Now is the time to buy more. Remember the words of Warren Buffett: be greedy when others are fearful, and be fearful when others are greedy. So now that people are fearful, now is the time you should be greedy. We always say buy the dip. Now that it is deep, buy it. Okay, that's aside. So let's go ahead to mutual funds. Okay, before we talk about mutual funds, let's talk about investing strategies. There are different kind of investing strategies that smart investors like you and I should, always deploy or have in mind. Number one is long-term investing. The way to win in markets like crypto and stocks is long-term. So if you follow what is happening in the market short-term, you could find yourself panicking and you will sell at a loss. So this is why before you get involved in stocks or a crypto market, you should have this long-term mindset, because from historical performance, it has already been profitable investing in the stock market, long-term. So don't have this short-term mindset when you're trying to invest in the stocks or crypto markets. In fact, anywhere, even in real estate, always think about 3 years, 4 years, 5 years, 10 years and above. If you want to make money within 3 months, 6 months, 1 year, then you have to consider low-risk investment opportunities like mutual funds we're going to be talking about this evening. So if you know that you need that money in the next 6 months, instead of investing it in the crypto markets, invest it in mutual funds. Mutual funds, the worst that will happen is that you will not get profits, but your capital most times will come back to you. So this is why you have to diversify your portfolio. That's another investing strategy. So a smart investor has different kind of assets in his portfolio. Some people, they talk about only real estate, so they only invest in real estate. That's not a smart investor. Some people talk about cryptocurrency and they only invest in cryptocurrency. That's not a smart investor. A smart investor has in his investor portfolio low risk instruments, mid risk instruments, high risk instruments. In fact, a smart investor even goes further into having liquid instruments and illiquid instruments. Liquid instruments are mutual funds, for example, stocks, crypto, the ones that you can sell when you are in need of funds, in the short term. Illiquid investment opportunities are like, gold or real estate. When you need the money, you likely have to sell at a distress sale. So it is very important that you balance your portfolio. Balancing your portfolio helps to reduce risk. So when there is a downtrend in the crypto market or in the stock market, you're not bothered because some other of your investments are also doing well. So you look at your commercial paper, look at your mutual funds, they're doing well. That's why you always find that I do not panic. If there's a bear market, Bitcoin falls to $50,000 or maybe worse than that, Ogochukwu will not panic. Why? Because I have other investments. I have landed properties, I have commercial papers, I have bonds. So even if I need money in the near term, I can liquidate those investments and wait till whenever the stock market or the crypto market recovers. So this is why it's very important that you diversify your portfolio. Do not become too greedy that you take all of your money and invest in cryptocurrency because you're trying to 10x 100,000. That's what some people do. So because they want to get rich overnight, they take all of the money and earn money that they work for and invest in crypto market. In fact, some people will go as far as investing their house rent. I don't know how smart that could be to them. So do not become too greedy that you invest all of your money in one asset class. Also, do not become too fearful that you invest all of your money in one asset class. You should have a minimum of 3 asset classes. Minimum. 3 asset classes, minimum. Right? So last week we talked about commercial papers, bonds, and what did we talk about again? Treasury bills. Right? Those are 3 different asset classes. Now we're talking about mutual funds. So as you go on with this Academy of Investing series, you're going to be learning other asset classes. What I will expect you as a smart investor is now at the end of the series, now decide which of these asset classes am I going to use to build my investment portfolio. I wouldn't expect you that is just starting out with investing to have all of them together. It is good that you start from the ones that you're more knowledgeable about and then progress into the ones that are more complex to you. And with time, as you keep on attending Money Lessons Live or any of our investment sessions, you're going to get more knowledgeable and you have more confidence. Because one reason why a lot of people are scared of investing is because they don't have knowledge. They would argue, but it's the fact that they don't have knowledge. The more knowledgeable you are about an investment opportunity, the more confidence you have. So always seek knowledge, right? So if you're here this evening, this should not be your last time on this session. There's going to be another one next week, and there's going to be another one the last week of the month, right? So next week we're going to talk about stocks. I think the upper we're going to be talking about cryptocurrency. So mutual funds is what we're talking about today. So there's another investing strategy called dollar cost averaging. What is dollar cost averaging? Right, instead of investing $1 million in a particular asset, maybe at the beginning of the year, what you could do is to spread that $1 million into maybe 100,000 in 10 places so that you can invest on a weekly basis. What I would do for you when you are investing in a volatile asset like cryptocurrency is to help you take advantage of market dips. Now that market is low, so you buy low, and when the market is high, you are now having more units and you make more profits. So when you invest lump sum, you miss out the opportunity of buying when the market dips. So we expect that the market will dip. That's why we talk about dollar cost averaging. So it beats my imagination that people panic away when the market dips. We know the market can dip. We know it's a volatile market. We expect the market to go like this in the short term. And that's why we talk about dollar cost averages. So if the price goes down, you buy and get more units. If the price goes midway or maybe up, you buy. So you keep buying, and at the end of the day, you're going to average the cost of your total purchase instead of just buying one time. So that's the difference. So dollar cost averaging, it's more beneficiary to high risk investment opportunities that there's volatility, like cryptocurrency and the stock market. Dollar cost averaging won't really help, in other kind of investments where there's no volatility. Okay. Introduction to mutual funds. I don't know why I'm having on news today. So now we're going to the subject or the meat of today's session. Yeah, Innocent, I can see you. Savisco Graphics, I can see you. If you're just joining us, put in the comment section your name and where you're joining us from, and share this to get other people to join us. It's been a beautiful evening so far, and there's much more to come your way. So what's a mutual fund? A mutual fund is a pool of funds collected from multiple investors to invest in a diversified portfolio of assets, right? So instead of you looking for commercial paper or treasury bills or bonds to invest in, maybe because you have a very small capital, what you could do is to look for a mutual fund where all of these are already in that basket. So a mutual fund is likened to an ETF. You know that ETF is a combination of different stocks and it's traded on an exchange. Now, the difference between an ETF and a mutual fund is that the mutual fund does not trade on an exchange. So it doesn't behave like a stock. A mutual fund is low risk and it behaves more like, the bonds, treasury bills, and so on. Now, the difference between a mutual fund and, other kind of companies that are open for investments is that mutual funds are managed by professionals. Mutual funds are managed by what? Professionals like FBN Quest. These are guys that have been in the business of managing people's funds over time. So they are very much experienced, and whatever they tell you is what you're likely going to get at the end of the day. So mutual funds help investors to grow their wealth with very minimal efforts. So you don't need to do any analysis. You don't need to find out what commercial paper rates is or bonds, or you don't need to do all of those calculations. In fact, you don't need to know anything. You just need to buy some units of mutual funds and wait. That's it. You can decide to sell after a month. Mutual funds are regulated by Securities and Exchange Commission in every other country that is available for purchase. In Nigeria, it's regulated by Nigerian SEC. So mutual fund is not the same thing as Chinlax or Omega Pro or Agro Partnership or any of those kind of investments you have heard of that crash people's money. Mutual funds is very much regulated, and they are most times managed by established asset managers. I already told you FBN Quest, another one is AfriInvest, Stanbic IBTC, and so on. So whenever you hear mutual funds, think about legitimate investment opportunity. Think about an investment that you're going to put your money in and you can sleep happily or have very good, sleep. You don't have any restlessness. So you're not going to be worried about, Elon Musk and Trump, whatever fight is going on between them and the Democrats. It's not going to affect your mutual fund. You don't have to look at the news all the time. In fact, you can decide not to even check your portfolio in 1 year. That's how low risk mutual fund is. So mutual fund is good for two kinds of individuals. So mutual fund is good for two kinds of individuals. One is for individuals that have very low risk appetite. Two is for individuals that are looking for other kind of investment instruments to help them diversify their portfolio. So the goal of mutual funds for a smart investor is not to put all of his money in it. So you are here on this session. I'm not saying that you should go and sell off your stocks and sell off your cryptocurrency and buy mutual fund. No, I am saying that if you get additional income, instead of putting it into maybe stocks or crypto that you already have, put it into mutual fund so that you can have a diversified portfolio. How mutual fund works? Very simple, right? So you have maybe 10,000 or 20,000, and that money is too small to buy a commercial paper or to invest in bonds or treasury bills. What you could do is to buy some units of a mutual fund. Now, what the fund manager does is to allocate it into different kind of instrument. But what they do first for allocate to different kind of instrument is that I bring my 10K, maybe you and maybe some other persons bring our 10K, that could come together and make a millionaire. Then the asset manager or the fund manager will now distribute it into different kind of instruments. So you can see on the right side of the screen, the kind of instruments we have is bonds, equities are like stocks, then we have money market instruments like commercial papers, treasury bills, and then we have gold and other securities as well. So most fund managers display on their websites what they're investing in. Not most. Some show, some don't show. Or maybe you can ask for their fact sheets and they will show you what they're investing in. But one thing you need to understand that no two fund managers invest the same way. No two fund managers have in their mutual fund baskets the same kind of assets. Even if they have the same kind of assets, the percentage they allocate to them is often different. So investors now earn profits based on how much they invest. Some mutual funds pay dividend. Some do, I think, every week, some do every month, and then you can reinvest it and benefit from compound interests. Some mutual funds, you only make profit when you sell units you bought at the end of the day. Units price would have gone higher, so when you sell, you make profits. So you always have to find out before you invest, because some of these asset managers or fund managers of mutual funds, they send out their marketing agents to tell you some sweet words you like to hear, and if you're not careful, you may invest for the wrong reason. So ask questions. What am I going to get at the end of this investment tenure? Am I going to get dividends on a monthly basis, or am I going to get an appreciation in the price based on units I bought, based on the units price I bought some months or years ago? Very important. Ask questions. Okay. So type of mutual funds. Now I told you that different types of mutual funds. Some fund managers have different types. Some have one or two. Some just have only one. Right. So there's what's called equity fund. Now equity funds is investing majority of the investors' funds in the stock market, because that fund is targeting high return. So because you're not an expert like me, you do not know the kind of stocks to buy, and maybe you're not in our investment club, but you want to invest in the stock market, what you could do is to go and buy the equity fund from maybe Stanbic IBTC or FBNQuest or any other asset manager there. Most often than not, some of them have 60 to 70% of that fund invested in stock market and the other 30% in other instruments. So you can benefit from the stock market without having to invest directly in the stock market. That's the idea. So you don't need to know how to analyze the stock market. You don't need to have any prior knowledge about the stock market. Just give your money to the asset manager, because I told you they are professionals. They have been doing this thing for donkey years. They know how the stock market works, and they can make informed decisions that will help to return your money with the capital and maybe a little profit or big profits. Depends on the kind of asset manager or the fund that you invest in. So there's fixed income fund, right? Fixed income funds are usually low risk. Equity funds are high risk. Again, before you invest in any mutual fund, ask the fund manager, ask the agent, this mutual fund I'm investing in, is it low risk, is it mid risk, is it high risk? Because no two mutual funds are the same. Yes, in case you don't know, there is high risk mutual fund. So don't just get excited with the fact that they show you the percentage of what they made last year, right? Past performance does not guarantee future performance. So ask questions, guys. So you have money market funds, right? Money market funds are investing, in short-term, low-risk investments like treasury bills and commercial papers. Last week, I told you that treasury bills is to government, commercial papers is to corporate organizations, establishments like MTN, Dangote, and the likes. Yesterday or 2 days ago, Stanbic IBTC issued their own commercial paper. 2 weeks ago, it was Access Bank. Commercial paper is only short-term, 9 months, 6 months, you get your money back. So because you don't have ₦1 million or maybe ₦5 million to invest in commercial paper directly, you can go and invest in a mutual fund that has commercial paper in it. And beautiful thing about mutual fund, most asset managers in Nigeria, you can start it as low as ₦5,000. So there's no excuse. So some people say, I don't earn enough money, I don't earn a lot of money to invest. No. Right? You can invest as low as 5K. You don't need to have so much money to invest in mutual fund. So you have balanced funds. Balanced funds have a mix of stocks, they have a mix of bonds, they have a mix of money, they have a mix of everything in a 50-50 ratio. So that kind of balanced fund usually says mid-risk, right? It's not low risk, it's not high risk. So the market is not doing very well. I mean, the financial market like stocks and crypto, you don't feel the impacts as much as somebody that's investing in an equity fund. And then you have real estate investment fund, what's popularly called as REITs. So they invest in real estate for those of us that do not have capital enough to buy a land or to buy a property, but we still want to feel like we're investing in real estate. You can buy REITs. Apps like RiseVest give an opportunity to invest in REITs with as low as $10. $10 today is about 16,000 naira. So yes, when people are bragging that they have real estate investments, you also can say you have real estate investments. So you can see that the barrier to investing is now lower than the days of our forefathers or our fathers, where they needed to have a lot of money to invest. Now, you don't need to have a lot of money to invest. You just need to have knowledge and know where, you just need to have knowledge and the skill of using the investment apps that are available right now in Nigeria, or even in abroad, wherever you are. So the game has changed. You don't need to go into any fiscal office to invest. All of the asset managers, all of the regulated, investment companies, they all have websites. They have apps. It's easier than ever. You don't have any excuse. You don't need to go for site visits or what I call inspection. Maybe if you want to buy land, we need to go for inspection. But when you want to invest in mutual fund, you don't need to go to any office. You don't need to go for any inspection. Everything is available on your smartphone. You just need to know where to go. Investing is easier than ever. So don't sleep on it, okay? So what is the driving force of mutual funds and interest? This is very important. So we're going to discuss economics now. Those of you that have been following me on Facebook, I'm talking about learn economics, teach your children economics. Very important. There are 5 key subjects that you need to learn and master. I think there are 7 or 5 to 7. But one of them is economics. There's mathematics. I'm discussing one of my staff who said that she doesn't like maths. I smile. So you need to understand economics. You need to understand mathematics. You need to understand politics. You need to understand governance. You need to understand the financial markets. See, if you can understand these 5 things, you'll be far above your peers because you'll be able to make informed decisions. When people are panicking, to jackpot, you would know that there's a reason why this thing is happening, and you decide to not move in the same direction they're moving. Because a lot of people cannot make informed decisions. Do you know that jackpot is an economic decision? Jackpot is a financial decision, but some people don't even know. They're just following their friends. So when you understand these things are put on the screen, you'll be able to make an informed decision per time. Number 1 is inflation rate. What is inflation rate? It is the upwards increase in the price of goods and services over a period of time. So you'll be hearing people say that, oh, prices of things are going up. That is inflation happening. What is MPR on the right? MPR is monetary policy rate. This is the interest rate of the CBN. Yes, CBN has an interest rate that it lends money to commercial banks, and then commercial banks now add a little on top that interest rate and lend money to the public. This MPR is also what guides low-risk investment instruments and fixed income instruments like mutual funds, commercial papers, bonds, and treasury bills. If the MPR goes up, the rate for mutual funds goes up as well, because mutual funds, like I told you, is a basket of mixed instruments like bonds, treasury bills, and co. When MPR is going up, treasury bills, bonds is going up as well. When MPR is going down, bonds, treasury bills is going down as well in rates. So I told you that this is the year of the Naira. Why? Because MPR is high and inflation rate is low, according to CBN. Some people argue that the inflation rate is more than what CBN says it is. I think they said 24.5. Well, according to what is available to us right now, we can see that inflation rate is lower than MPR. And this is the best time to invest, because previously we would say that investing in mutual funds is not profitable because the profit would be eroded by the devaluation of Naira. But in recent times, Naira has not been devaluing like the last 3-4 years. Naira now is about 1.6. It started this year at maybe 1.670 thereabouts. Now it's 1.6. It fell to 1.5 and back to 1.6, and I'm just been playing around 1.5, 1.6, 1.5, 1.6 for the past 3 to 4 months. So you could see now that the valuation of Naira is not going to have an impact like it did last year or the year before on mutual funds. So when people say that investing in Naira is not good, that makes sense last year or the years before, not now. Because now if you invest in a mutual fund that gives a return of 22% or 25%, and you invest 1 million, you get 250,000 Naira. The devaluation of Naira this year is not going to be as high as 25%. You can take that to the bank. I said it. The valuation of Naira this year is not going to be up to 25%. So even if Naira devalues by 10 or 15%, you're still going to have more profit by investing in Naira instruments. So another thing that is you have to consider, that affects mutual funds interest rates is Naira dollar exchange rates. Sometimes, the CBN is trying to manage the dollar Naira exchange rate. What they do is to take away liquidity from the market. Recently, you can see that CBN increased treasury bills rates, despite the fact that the last one was oversubscribed. They still increased interest rates. Why? Because they're trying to make people to invest more in Naira instruments than speculating Naira dollar. Because what some Nigerians do is that when they see that the rate is going up, they start buying dollar. So the CBN is now trying to make people less interested in buying dollar by increasing interest rates of treasury bills. So it's a game. Then there's oil price. When the oil price is low, it affects the economy because Nigeria is a government. When the oil price is low, it affects the economy because Nigeria is an oil-dependent economy. Most of the foreign exchange that Nigeria earns is based on oil that we sell. So if oil price falls, we make less money. If oil price goes up, we make more dollar. So this is the things that the CBN uses, to balance the economy. Sometimes they have deficits based on oil proceeds that they make. Maybe they have a benchmark. I think the benchmark for federal government budget this year is around $35 there, but I can't remember. Oil price has been dancing between 70 and 90, I think, this year. So if the oil price falls below $75, there's going to be panic because the government is making less money. So that will going to bring an imbalance in the macro economy. And this will have an impact on the MPR and also effectively going to affect your mutual funds rates. Choosing the right mutual fund, right? So there are different kinds of mutual funds. Before choosing the right mutual fund. So first of all, you have to find out what is your investment goal. There's something I often say: no two investors can invest the same way. Even if they have the same father, they have the same mother, they work in the same organization, live in the same city, no two investors can invest the same way. One likely will have a wife that's a hyper spender, and one may have a wife that is a conservative spender. One is somebody that maybe, smokes, womanizes, so he spends a lot of money. One might be a church guy that gives a lot of money to, church funding, church project, and so on. So no two investors can invest the same way. So it depends on your income and depends on your financial stability. Some people can afford to invest 500,000 every month, and even if that money doesn't come back to them, it's not going to affect their financial stability. Some people, they can't even try investing 50K, because if that 50K does not come back, it's a big problem. So no two investors can invest the same way. Before you invest, have an investment goal. What do you want to get at the end of this investment? Is it capital growth? Is it capital preservation? Or just want moderate growth? Because mutual funds is not for capital growth, it's just for moderate growth. They are just moderate. So if you are looking for big profits, mutual fund is not where to go to. Don't come and tell me, the interest rate is low. Go and invest in cryptocurrency if you want high interest. So if your risk tolerance is low, right, money market is where you should go to. If your if your risk appetite or risk tolerance is medium, look at balance fund. Balance fund, I told you, has a mix of equities in the stock market and also has commercial papers and bonds and other stuff in it, like a 50-50 ratio. So you can benefit from the stock market without having to invest directly in the stock markets. So you also have high risks. So if you are someone that has a high risk tolerance, having a high risk tolerance means that if something happens that makes the market underperform or perform below expectations, you would not have a difficulty sorting maybe your immediate bills, or it's going to put a financial stress on you. Like I said in the last class, some people can afford to lose 1 million naira and sleep happily. Some people cannot. So if you know you cannot lose 1 million naira, do not take 1 million naira to go and invest in a high risk investment opportunity. Okay? So look at the fund performance over time. I also said that no two fund managers have the same kind of mutual fund. No two mutual funds have the same performance. I think right now in Nigeria, FBN Quest and Stanbic has the best interest for their low risk mutual fund. So find out what is the performance over time. Like I said, past performance does not guarantee future results, but it can inform, it can guide you on what to expect. There's no guarantee. If you go to any fund manager website, they'll put percentage there, but there's a fine writing underneath. They'll put it very tiny. They'll tell you that past performance does not guarantee future results, but an average Nigerian will not see that. If the percentage drops tomorrow, they start making noise. Please don't behave like an average Nigerian. So there's what we call expense ratio. It's just like management fees. Some fund managers take a percentage of your interest, for managing your portfolio, for managing the mutual fund for everybody. So you have to find out. Some don't tell. Most companies in Nigeria don't reveal how much that percentage is. So, but you could ask, they can tell you, right? So liquidity, very important, because mutual funds is supposed to be a liquid kind of investment. So find out how much can I get out of this investment when I need it? How often can I get the money out when I need it? And so on. Some mutual funds, if you invest today, you have to wait 30 days before you can withdraw back your capital. Some you can only invest, you can invest today and withdraw, in 1 week time. Some even the next day. So you have to find out how fast can I get my money out when I need it. Some mutual funds you need to fill form to get the money out. Some you just click on the app and they'll fund your wallet and you can withdraw it immediately. These are the questions you need to ask yourself before you choose the right one for you. So choosing the right mutual fund is not based on the mutual fund, it's based on you as an individual. What can be right for me may be wrong for you. What may be right for you may be wrong for me. So it depends on all of these things I put here. Your investment goal, your risk tolerance, the fund performance over time, right? Some of us may want high return versus, low return. Some of us want a fund where we can easily withdraw the cash that we have invested. Very important you do this analysis before you choose the right mutual fund for you. If you don't know how to go around this analysis, it's too much for you to, phantom or to understand, then you need to seek expert knowledge from an investor. How do I put it? You have to seek knowledge or seek guidance from an investment expert. Where to buy mutual funds? Okay, so there are different places that you can buy mutual funds. There are asset management companies that you can buy mutual funds from. There are some banks, I think some banks still sell, but most banks don't offer mutual funds anymore. CBN told them to separate their asset management from their normal regular banking. So some banks now have asset management separate from their bank, like MPN Quest to First Bank, Stanbic IBTC Asset Management to Stanbic IBTC Bank, and so on. So you can talk to your banker, they can recommend their partner for you to invest in, okay? Then you have investment apps like Cowrywise. Cowrywise is one app that aggregates different mutual funds. So instead of you going to look for the individual mutual funds to invest in, you download the Cowrywise app, you see different mutual funds that are available from different fund managers. And there's RiseVest for REITs. RiseVest has what is called a real estate plan. So if you want to invest in real estate without having to buy land or property directly, you can go to RiseVest. Some fund managers have, opportunity for you to buy the mutual funds directly on their websites. Some, before you can buy on their websites, you need to do a registration offline, fill some forms, and then they'll send you login details for which you can now use to log in on the website and buy the mutual fund. So like I told you, you don't need to go to any office to buy a mutual fund in 2025, unlike maybe 10 years ago. This is a slide that I was going to talk about last week. So it is here now this week. I'm going to talk about it in the next 5 minutes. And I think this is the last thing I'm sharing this evening. No two investors have the same risk appetite. I said it before, and I'll keep saying it until every one of us understands this. I have a very high risk appetite, right? And that's because I'm in my early 30s. The way I invest today is not the same way I'll be investing in my late 30s and in my early 40s. As I go older, my risk tolerance is supposed to reduce. Why? Because I have family. I have less number of years to work. Now I can afford to lose money in cryptocurrency because I have more time or more years ahead of me to work and make the money back. If I were in my late 40s, I can't be investing the way I'm investing now in the cryptocurrency markets. I have one of my colleagues called me today, I think he's in mid-40s, to, for investment guidance on some liquidity he has in dollars or what to do with the money. And he was asking me, why don't I invest in a particular investment opportunity? I told him that right now, it's too low risk for me. I'm an aggressive investor for now. So I'm investing more in the crypto market and the stock markets than any other investment class because I can afford to lose the money. By afford means that if I lose that money, it's not going to affect my lifestyle, it's not going to affect my living expenses, it's not going to affect my financial health so much like some other people. So if you set out to invest, find out what your risk tolerance is. That's number 2. Factors to consider in determining your risk, your investor profile. Risk tolerance. Some people don't even know their risk tolerance. They just are greedy. So they tell them of how they can make maybe ₦1 million by investing ₦10 million over 6 months. They get excited. They don't know how to calculate the percentage. They don't know what is high, what is low. They just get excited and jump into that opportunity. And when they lose the money, they start crying. So your risk tolerance is a function of how much you are willing to lose. If you're not willing to lose any money in investing, it means that your risk tolerance is very low. And then it means that you should stay away from high risk investment instruments. It's something I always say, before you invest in any opportunity, ask questions. What kind of investment instrument is this? Is it high risk? Is it low risk? Is it medium risk? Somebody invested in stocks recently and reached out to me. I was like, I don't know what's happening. My portfolio is the value is dropping. I laughed before I respond. I said, don't you know that it's a high risk investment opportunity that you put your money? That the stock market is volatile. Sometimes the price will go down, and if it goes down, your portfolio will go down as well. The price goes up, your portfolio will go up as well. So if you cannot manage this up and down movement, stay away from high risk investment opportunity. This is why I'm hosting these classes to teach people, because the day anybody will come and meet me and tell me that, you recommended that we should buy this stock. You said we should buy this cryptocurrency. That's not doing it. I will first laugh and answer you. Then I will show you all the classes I've held where I told you what you decided not to pay attention to. Yes, recommendation. But I've told you as well that there's a likelihood for you to make profit by investing. There's a likelihood for making massive profit in the crypto market. There's likelihood for you to make massive profit in the stock market, but there's also a likelihood for you to encounter massive losses. So you can have it. If you want to have increased growth, be ready for an increased losses. Now, I'm not saying that you would lose money. I'm just telling you that there's a likelihood. So you have to prepare your mind ahead, so that when it happens, you do not get into depression or financial loss or a financial predicament. Some people are not sleeping well anymore because stock market is red. How can you know? I'm sleeping very well. I have thousands of dollars in the crypto market and the stock market, but I'm enjoying my sleep. I can't be bothered because I know this is normal. What is happening is normal. So when you have this knowledge, when you have this understanding, it builds your confidence, and then your risk tolerance becomes high. But sometimes, even with all this knowledge and confidence and understanding, it still cannot make your risk tolerance high because of your age. So I put here age. So somebody that is between 20 and 60 years can afford to take some risk, moderate risk, moderate. If you are below 45, anybody that comes to me that is above 45 to guide the person to invest in stocks and crypto, I discourage the person, except I do not know your age. If I later find out your age and above 45, I'm sorry, you don't late. Maybe even if you want to invest in stock market by fire by force, stick to ETFs like VU, S&P 500 index, or stick to Bitcoin. Anything else, come on your mind. You don't owe, no vex. Try again in your next life. Stay away from high risk investment opportunities if you are more than 45 years, because you don't have so much time to work again. If you lose that money, it's going to affect you. These are the things we need to factor. Then your investment knowledge. You are just starting out with investing, learning the basics, and then you're going to be investing all of your money in shit coins. And then tomorrow you say cryptocurrency is scam. Invest according to your knowledge. You can't invest like Ogochukwu. Ogochukwu did not wake up today and started investing. He has been investing for the last 7 to 12 years of his life. He has built knowledge, skill, expertise, and confidence over time. You cannot invest the same way I invest. But I can give you the morale, I can give you the guidance, I can give you the knowledge, but you have to do it until you become as knowledgeable as I am, or as confident as I am. Your income level also matters. Someone that earns ₦1 million can afford to invest 200K in an investment, and the money goes to waste. The person will not feel too bad. But somebody that earns 200K and you invest 100K in an opportunity that goes bad, of course, you're going to feel the impacts. So the more money you invest, the more money you earn, the more, aggressive you should be. Although some people earn high and invest very small amounts, they invest as though they are sending urgent 2K or 3K to their girlfriends. I don't understand. You're earning $1 million every month, but you're investing 100K. What's that? The more money you earn, the more you should invest. Then what is your time horizon? This is a factor that is very key. You cannot have a short-term horizon and want to invest in crypto markets. Don't take your house rent to invest in the crypto market. You could try to invest your rent in maybe mutual funds or bonds, but not in the stock markets. Any money needed in the short term should not be invested in a high risk investment opportunity. So if you have a short time horizon, then you should be more conservative than aggressive. Okay? So what every investor needs to know, and let's talk about this. Invest idle cash, stop leaving idle money in your account. Your village people will take that money from you. Know your risk profile. Do not invest like an aggressive investor when you don't get mind. When you're actually a conservative investor. Don't try this. Don't come and message me later that the asset I bought and the price has dropped. I will tell you to go and watch the class I referred you to. Remember the 50-30-20 rule. 50% for your living expenses, 30% for investing and savings, 20% for wants and charity. Diversify your investment. Do not put all of your money in one basket. No matter how juicy an investment opportunity is, do not put all of your money in that one investment opportunity. Keep on investing. Don't start today and stop. Investing is a lifestyle. Every day, every month, invest. Sorry, you may not be able to invest every month, every day. You may not be able to invest every day because you earn monthly. But make sure as a minimum, you invest on a monthly basis. No matter what happens that month, invest. Avoid get-rich-quick schemes. You cannot build wealth by chasing Ponzi schemes and pyramid schemes. You build wealth through structured systems that are predictable. Even though you don't make the money this year because the market is down, at least 2, 3, 4 years from now, there's a likelihood that you get the money back. So thanks for listening, and don't ever forget that investing is a marathon and not a sprint. Now I can take questions if you do have. Those of us that are here about a few of us that are here, I'm going to drop a link in the comment section very soon. It's a WhatsApp group link. What I'm going to be doing for those of you here this evening is to link you up to an asset manager like Stanbic IBTC or FBN Quest so that you could start investing. Those of us that may not need my guidance, maybe you have a way to go and contact any of the asset managers, you can. But if you need my guidance, I'm creating a group, a temporary group for those of you that stay to the end. So you will have access to my guidance for setting up your mutual fund accounts. So questions now, if there are any, then I share the link to the group. Okay, so please do not share this link to your village people that are not on this call this evening. I'm going to know. I've shared the link with my other account. So if you have any questions, you have 3 minutes, 4 minutes to ask the questions before I run away. It's been a great evening so far. So take advantage, ask me these questions for free so I can answer you. 30 days, minimum of 30 days. Yellow Len is asking for how long would you advise that one leave one's investment in mutual funds? Minimum of 30 days. Usually the mutual funds rate is prorated. So if they tell you that expected returns is 22% per year, they can prorate it to monthly. So you can divide 22% by 12. That's what you get for that month. But if you want to get more returns on your mutual fund investments, then you need to wait for a longer period of time. Okay, you're welcome. Any other question? All right, so thanks everyone for joining us this evening. Going to see you next Saturday. If you have further questions, you can join the group. I share the link there in the comment section, and then we'll take it up from there. Bye for now.